Really? So so what got you into this world? Like where did it all started? Where did you start trading? Where this love come from?
That's my first inspiration. I had a humble background upbringing, and I was I was like in the 80s, late 80s. I was a part-time shoe salesman. Making low pay, and I saw this person dropped a packet for whole life insurance. Oddly enough, and in the packet, it showed the breakdown of compounded growth. Based on interest. It showed like how much money would turn into, and I was young. I was like 17 years old. I thought, man, if I can just get some capital up together and let it compound at my age, I could have some serious money, for me pretty quickly. And that's what really started everything. It just inspired me to figure out a way to get capital, put it somewhere that compounds, and then just grow it exponentially over years. And that was really the first thing, was really the power of compounding, compound interest, compounding gains, compounding dividends. That was my very first mathematical inspiration. I had a lot more as I went through, but yeah, I never turned back from that point. It wasn't easy. It was slow going at the start, like everybody else finds out, but you can really build something through capital and growth.
People say compound is like the eighth wonder of the world. You can pretty much everything in life is kind of compound the decisions you make.
Yeah,
From the minute to the big decision. Trading is, I used to be a trader myself,
yeah, I love
a
that. That's
profession, yeah, professional trader. But one thing I learned is like every trade is the compound of the last trade you made, and that's due to emotions, decisions you make, trades that fail can linger on to your next trade. You're chasing a trade. That's the compounding effect. Um, and I think compound is a huge thing. I think a lot of people don't really take take actually they take it for granted. They don't realize how much compounding actually it's your best friend if you know how to use it right, and it could be your worst enemy if you don't use it at all.
Yeah, I agree completely. Like you just nailed it. Like everything, and that principle, not just with capital, but carries over in relationships and health, nutrition, exercise, the exponential compounding of results. I think like was it at James Clear, his Atomic Habits, where he shows the power of a 1% gain over each day in any behavior, exponentially makes grows. And with Darren Harden had a book called The Compounding Effect, I think, or The Power of Compounding, where he, like you said, goes into everything. So like the principles you learn in finance and in investing and trading apply to everything. That's what, like you said, so many new traders, they try to make some small amount of money and they just turn to gamblers and try to turn this a huge amount of money, and they just ruin themselves over and over again with no concept. And then, like you said, then they compound their psychological problems, and then they just ruin themselves. I mean, that's the fast path to the 90-95% that just fail miserably. Instead of just saying,
But
hey,
how do
here's my
you
capital,
solve that? How do
I
you
just need to
solve that?
compound it consistently. What's my path?
Yeah, but as a new trader, how do
Huh?
you
How
solve
you
that?
solve it?
As a new yeah. You got the psychological problems,
Uh,
and you know what I mean? Then you got the emotional problems, and you have the I'm chasing every trade, you know what I mean? The market ain't going my way. And a lot of people come into the market thinking that, they can beat it. And the truth is, you can never beat the market. You can probably maintain for a short amount of time, but even in the median run, forget the long run, the median run, you're gonna lose.
yeah, you're exactly right. And they come in, I guess, the two things, like the they can't even beat themselves. They're trying to beat the market. They can't even beat themselves. Like they beat their own psychology and their own weaknesses mentally and mathematically beat them. And they start backwards. And they come with a gambler's mindset. They don't come in with an investor's mindset or a trader's mindset in the financial markets. And there's a roadmap to the ones that did. Everybody, and some people say it's impossible. You can never beat the market. It's completely impossible. There's whole books written with tons of people, investors and traders, who beat the market on every time frame, like the Market Wizard series, the Trend Following Covell series. They showed the people that did it at scale. Uh, And so it's possible, but what the heck did they do differently? And so few new traders ever get to the barrier where trading and investing is first and foremost a positive expectancy model. You don't think of a trade and your ego, whether you win or lose. You think of a complete systematic process for taking money out of the market from other traders and investors. And it consists of risk reward ratios where you're going to risk a little to make a lot. You're going to, your wins are going to be bigger than your losses because you're going to cut your losses short and let your winners run. That's one of the key principles. And most people, they have a little loss. They want every trade to be a winner. And then they have a loss and they let it grow and grow and grow and bigger and bigger because they don't want to admit they're wrong. It's an
They
ego thing.
never
Then the other ones
they
is they have a
never
quick win. Oh,
trained to
good. They
be a
take,
winner.
yeah, it's
They never trained to be
psychologically.
a
Yeah,
winner.
and it's
Yeah,
like, that is
that's a
human
good quote,
psychology.
man.
You let,
That's a good quote. You never trained to be a winner.
yeah, you Yeah, you let the winner. If you're winning, you should be hopeful that it keeps going until the risk reward ratio changes. And if you're losing, you should just move on. That's one thing that saved me early. Is I've had my drawdowns and I've had my problems early on, no doubt. But I did not have to sit in a loser and hope it goes back. That's not what I'm trading or investing for. I'm trading to make money. So if it's not making money, I'm getting the heck out. I'm not going to sit there and something goes down lower and lower and lower. And oh, please get back to even. Please get back to even. No, I'm just going to get out and go find something else that's going up. It's just that's the real biggest psychological factor is you got to find winners, let them run, and cut losers short. And like how you do that on whatever time frame you're on is just you have to create a systematic process where well, this is going to be a loser. I'm going to lose 1% of my capital. If it's a winner, I can make 2 or 3% return on my capital, and I'm going to probably win half, lose half. But when 10 trades are done, I should make money. That's really where you begin to turn a corner right there.
Man, dude, I think everybody has gone through the process of I just need this to get back to even and I'm gonna sell it. I just needed to get back to even. I think everybody has gone through that. Everybody has gone through that phase. And there's a
Yep.
lot of people that never even gets out of that phase. And
Yep.
I had my fair shares of once it gets back to even, I'm selling it. And then it gets back to even. He's like, yeah, it might it might turn around, might be profitable. And it rarely does. It rarely happens. It rarely gets back to the problem. Even if it gets back to
Yeah.
even,
Generally, you
it
find
ends
yourself on
up
the wrong side of it.
you're on the wrong side of a trade 100%. Um, I really like the one quote that uh you said. I saw only the game can teach you the game, and I read that, and most of the stuff that you were just saying is only being taught. You only can really be taught that by being in the game.
Yeah, you can
You
have all the
know,
simulators and back tests and historical studies and chart patterns. So you can have all that you want, but if you put too much money on the line and it moves against you immediately, then you're gonna be all messed up mentally. You panic and get out the panic at the absolute worst time is usually when people get out when they can't take any more pain. They should have got out, immediately. Either panic early, get out, or don't panic at all, because you're going to ruin yourself. And the psychology of that, it's so funny that and I did spend so much time research and study. It's just so funny, like you said, you have real money online, and your position size is like a knob on your psychology. But 90% of trading psychology, investing psychology, is your position size. The more you have, the higher your dial is up on your emotions and ego. So you want to get a position size level that doesn't affect your ego and psychology, one that just makes you, ambivalent to, win or lose, it's just a part of the next 100 trades. That really solves a lot of psychological problems in trading. You bigger your position size, the more your ego and emotions get wrapped up in the outcome.
so I think a lot of people struggle with getting over all those humps of I want to take my account to this. I have a $5,000 account. I want to get to like $30,000, $40,000 account because they want to buy more shares, more options, and because they want to make bigger profits. And that plays with your mental, that plays with your psychology. And I think everything in life is really psychology. How you talk to people, how you trade, how you invest, how you do business. I think it's all psychology because most traders, most business people, most even regular employees, they stop themselves because it's a mindset. It's a fear or something. You know what I mean? So, but I want to talk about, did you write some books? Because I did see that on your LinkedIn, you used to be an author. Are you still an author?
Yeah, I've written and published about 20 books. 20 books.
20
Some are second
books.
editions across just about all the areas of trading. So I mean, I've read about 400 trading books. At one time, I was the top Amazon. I was 100 the peak early, like 2005, 2006, 7. I was the 155th most helpful reviewer on all of Amazon across all categories. I read about 1,000 nonfiction books at that time, and I reviewed about 400 trading and investing and personal finance books. So I had so much knowledge. I got to a point where like I was reading, so I just started writing them just to, some of them, and none of my trading gets so much better after I write a book. Some of my best trading happens after I get through writing a book about a specific topic. It's really fun how you like, you learn. Like I used to learn a lot from writing book reviews on trading books, 20 years ago. That really helped me. So I
Wow.
actually started writing, getting all my thoughts together in books really helped me solidify everything on paper. So that's something what I did. And, it's cash flowing asset once you publish. So it was a good double win for me. So yeah, I've had like about 7 or 8 of them went number one in the stock market category in Amazon in the last
That's
decade.
Dude, man, that's amazing. I definitely got to grab some, maybe one or two of those books, and actually read them, look through them, and definitely something to learn there. But I do want to ask you, man, in this economy, this state of this world, like companies are going up and coming down just as fast. Um, and Nvidia is probably one of the what this year and a half the most sensation. What's your thoughts on that?
Yeah, NVIDIA was, I mean, that is one of the biggest overbought. And I was there in the .com. I was holding tech mutual funds heavy in the 90s. I was beginner's luck on that one. That was just, I thought, tech's the future. I loaded into tech back then. We even have, before there's even ETFs, real early in the early 90s, I was into tech mutual funds. A lot of them quadrupled. I actually held them and they quadrupled. And I saw a bunch of crazy tech stuff and .com stuff and volatility. But that NVIDIA run, I mean, that's one of the biggest, strongest overbought runs I've ever seen in any individual stock ever. And getting into like 20, 27, 28 years doing this. And they were, and like fundamentally they were right. I mean, it did catch up with the price at one point. Now, whether it goes from here to catch up with the price is another thing, but the only way to have traded that was to be a pure trend follower with price action because it broke all the classic technical rules like overbought, going too far too fast, never pulling back for so long, and getting into
Over the
exponential
20-day
moves into
moving average,
yeah,
over the
over
50-day
extended,
moving average,
yeah,
everything.
extended by multiple deviations, like crash up almost as if something like crash from $10 to $1. It was like it crashed backwards, upwards, and never slowed down and had a few bases and kept going. I mean, it broke any rule. The only way you would have caught that is just a trend follower with no overbought filter with a big trailing stop. I mean, people who caught that thing and ran it all the way up were like, and the way I traded long ago, I quit trading that way because it fails so much, nowadays with so much range bound action and big reversals. But yeah, that's the craziest move. I've caught little piece of that. That was not something that was in the parameters of my system, and that's what people have to realize. You're not going to catch everything, do everything, and regret everything. Warren Buffett was dogged and trolled for years for not catching the .com bubble because the valuations made no sense for his investing system. You know, I miss things because it just doesn't fit within the parameters. I would lose money on a breakout of the 70 RSI of 20 stocks, but then Nvidia would make money. I'm not going to take all those losses for the one wild outlier. And but the trend followers that just do breakouts and let it run with a big trail and stop, they caught it and they made a fortune. But I stay within my swing trading system nowadays, and it's comfortable. I take my risks. I have but it's swinging up or swinging up, swinging down. Wide range. I make money. I'm not trying to be a hero and do some crazy lottery catch. Yeah, it took a long time for NVIDIA to do that. You would have lost most of the breakouts on that for a long time before you caught the big one.
Yeah. Well, most of it is at the end of the day, it is gambling. You know what I mean? You're taking a huge chance on huge chance on that finding the next Nvidia. You know, those don't come around very often. Most of them end up not even making it that big
Yeah.
that people do think is going to be the next Nvidia. Um, are you an option trader or are you just a pure share buying swing trader? Like, or
I
you
traded op
mixed bag?
I traded options. I was a mixed bag, but I traded options pretty heavily, like in 2007, 8, 9. I traded options a lot, but just the liquidity problems and the bid spread. Even if you win, they go deep in the money, and then have the bid ask spread you could lose money on, and the volatility. I just quit. It's just too much. I mean, I made a lot of money at one point with them, but the volatility and the biggest problem with options is it prices in the volatility, not even accurately, but overprices the volatility. So like if you try to buy something for an earnings play, to control the risk, it'll have a volatility crash after the earnings play, and then you lose the amount the Vega was in the option. So you have to overcome the time value of theta. You have to overcome the volatility priced in. It's just multiple things you have to climb over. I mean, and a lot of times, the people that make the money do the out of the money options, and it's really an all or nothing bet. It's just, I've worked myself into what I'm comfortable and happy doing. Because primarily large positions in index ETFs for the most part. I also trade the top big cap stocks, the Max 7, and then sometimes I'll trade smaller stocks or country ETFs like India or Argentina, or like the smaller stocks like Reddit and stuff. But really large index ETFs at scale because I like the movement is not so wild, and some of the best consistent technical action is in the indexes.
Wow. So what do you see for the next like 2025? Like, how do you think the market's going to move? I think the Dow's overpriced. I think the S&P's overpriced. I even think the small caps are overpriced. The Russell 2000 is overpriced.
Yeah,
I think
and
everything's
analytically,
overbought.
right now, technically, like you said, the Dow, all the index are pressing, like the Dow's pressing all-time highs. The S&P 500
Yeah.
is within about 1% of the all-time highs. We're pressing all-time highs. We're pressing the overbought, around 70 RSI and the upper third Keltner channel. 3 deviations from the 20-day EMA right now in so many charts, even with that Japan crash. Uh, right now, we have the weirdest situation. We have residential real estate near all-time highs on average across the country. We have stock market major index near all-time highs. We have the macroeconomics starting to roll over, like reinstatement of 818,000 jobs that never happened. We have manufacturing going down. We have copper going down. We have the inflation seems to stabilize, but it's still over the normal average. And then we're going to cut interest rates into all-time highs. That's a very strange situation for us to be in. And historically, the data shows when the Fed cuts interest rates for the first time after a rate hiking cycle, if the recession follows, the market crashes 15 to 20% in the next 12 months. If there's not an economic recession, then the market can rally 15, 20%. So it's almost the model would be
That's big.
macroeconomic, like whether the interest rate cuts spur economic activity and,
So
and
this is a
alleviate
50-50
the
chance.
recession from actually happening. Then we're back into another bull market. Yeah. So, I
So
mean,
this is
how do you bet
this
on
is a
that?
50
I mean, how do you
this is a
buy? I
50
mean,
50 chance. 50-50 chance right here. They cut if
but
cut
there's a,
if they
there,
yeah. So wow.
but but
What side of the
the
coin?
odds
What
change
side of the coin
quickly.
you on?
You actually see the GDP drop and a recession actually take hold. Then we get to where we're going to
Yeah. So what side of the coin you're gonna be on? Do
where
you
the
think
price
there's gonna
action
be a
takes me.
you gonna go okay.
Yeah, that's the
Okay.
key. I just follow what's happening. I don't. I mean, I know the probabilities, and I follow what happens. Like I'm not going to buy a Dow breakout at the 70 RSI. I mean, that historically will fail almost every time. But like if it drips down to the 30 RSI, I would. It's oversold. I would buy it. If we go into a recession and we have a crash signal, if I have a crash on the system, I'll go short. I mean, I'm not gonna try to look forward and predict it. That's virtually impossible. Anybody can do that, be a billionaire immediately. I'm going to just follow where the action takes me inside of my system's parameters. I mean, I have signals to take for different outcomes, and whatever the outcome of the technical outcome is what I will follow with my trading.
So how did you start New Trader U?
And one of my friends did websites, and he kept telling me, "You got to have a website." I'm like, "I don't need a website." And he kept on about, "You need to." He loved having websites. He said, "Well, you need to have something that's yours. You're going to do all these reviews. You need to do something on your own property, intellectual property, where you have it somewhere." And he taught me into it, and I finally did it. And that's really how it started. Uh, he did Around the Octagon. He had some MMA things, and then I just enjoyed Twitter for interacting with or X now, Twitter for interacting with other traders and people that I admire. That's where I was on Facebook and Twitter, following people I admired back then. I think I started that about 13, 14 years ago. And, just like almost like I'm a real big introvert. So doing something extroverted, actually getting in there was something I enjoyed doing. And then there was a guy, I had written so many reviews on Nicholas Darvis books. A publisher approached me and said, "Hey, you need to write some books about Nicholas Darvis since you've read them all and reviewed them all in the top reviews." So that's where it all started. First, he published me some paperbacks that I wrote. And then I went into my own publishing. My wife, I got married, and my new wife said, I can self publish. She was great on anything tech. So, technical. So we republished second editions of my books, my own, thing. So she was really pushing like, you need to self-publish and keep all the royalties. So everybody sort of like built this around me for me. I don't think I really started myself with just a few things.
Man, that's amazing, man. That that just says, man, right people around you makes the difference. You know what I mean?
Oh yeah.
Yeah, it seems like
Oh,
what do you
yeah.
think about that? I think trading is a very lonely what sport, I would say. It's a very lonely thing. It's I think that's also what plays on go back to psychology. It plays on the mind. It's a very lonely thing. It's hard to find good traders out there, and it's even harder to find great traders, or I mean, and people that knows what they're talking about. Because you get online, everybody's an expert. Everybody knows where the market's going, and then um, but there's very few people that actually go 20 years like you did and be consistent.
Yeah, it's like everybody needs a hobby. That's what's so strange. Is like, how in the world do you have time to do all the blog posts and website and books stuff? Like, yeah, it's easy when you don't like watching TV 5 hours a day or 4 hours a day or whatever people do. Like, I mean, that is like my hobby, like trading and investing in personal, really anything finance, business. I've always loved business, capitalism, personal finance, options. I love learning about options and how they move. It's just that is my hobby. Like while other people watching Netflix for 2 or 3 hours, I'm reading books and learning stuff, and that is my hobby. That's how I'm able to do what I've been able to do.
Where do you think the world is going, economy wise? Where do you think the
It's just
world's
a,
going, economy?
I think it all comes down to the debt. It all comes down like all of the risk in this country has been shifted to the U.S. dollar. That's where everything is. It's U.S. dollar. And it's so crazy that the economic advisor for this administration didn't even know how it works, like how the economy work, how they raise money. It's the the treasury issues bonds, treasury bonds, and they take in capital from the bond traders for their bonds, which were up to $1 trillion every 90 days in new debt, which is hard to even believe there's that much. The bond market can absorb $1 trillion in U.S. Treasury bonds. Of course, they retire older bonds, and then they take that money in, and the federal government, disperses it and spends it in the economy. So you have all these, they're the ones pushing, they're moving, taking the dollars from the bond traders out of the bond market, pushing into the economy through spending bills. That's what's creating the inflation, regardless of what party's doing it. They've been doing this, since forever. I mean, the debt's just done nothing but accelerate under every term, every president, every term, every time. And that's where the game is. Like the inflation is the only path. There is no way to stop the inflation unless they can grow GDP enough to offset the rate of debt. And that's virtually impossible. So it looks like I don't know any way macroeconomically that we cannot have, like when they cut interest rates, houses are going to keep going higher, which is mind-boggling. Food's going to keep going. Everything that's valued in U.S. dollars is going to keep going higher. And if we lose a reserve currency status, then we have a whole nother lack of demand, because all currencies are based on what you can buy with it and the demand for what is valued in those dollars
The
and how many
supply and
dollars are out
demand.
there to use. Yeah, that's what it all is. It's not politics at all. And so that's where I think the whole game is. So I don't know how they avoid this. We continually see the inflation rate go higher at the 2%, 3%, 4%, and stock market. I mean, that's the thing too, that this could it's because the recession, the Great Depression happened because there was a lack of money in the system. They pulled back the money supply in the system in the Great Depression. They don't do it anymore. 2008, they pumped all the money they could. That's why there was no Great Depression. The Great Recession was short lived and bounced back. And no one's even, this generation hasn't even seen a real bear market yet. Bear markets last years, years and years. Some last, the stock market was flat between, what was it, 1929 and 1957. The stock market was flat, excluding dividends. It doesn't always come back like it has come back, but it does when you push trillions and trillions of dollars in spending to the economy. So if they keep printing money and spending and keep running up the debt and the equities will go up because the supply is just not there. So many have gone private and people have to buy for their 401ks. Mutual fund managers have to buy, and the interest rates cuts should help the economy come back some. So the only way should be up unless something in the system breaks, like U.S. Treasury bond auctions fail and they're unable to keep pushing out the bonds, and the Federal Reserve has to start printing money to buy the bonds, and then the inflation party goes. So I think that's the core of the macroeconomic state. So right now, I don't see any way out of the inflation unless some huge revolution in the U.S. government, like that's going on in Argentina, where they're actually cutting back the government spending and madness.
Yeah, Argentina's economy has changed vastly quickly in the short time as that new president has came. So you might have a point there. I just don't see as we help so much people. I don't see us pulling back nearly as much as they did, even if we did, even if it came to a
No.
thought or idea of the government to do that.
Mm.
But um, but they have their economy has improved drastically in a short amount of time. You got to give it credit for that. So you might be right there. Um, but here's the thing: if we go into a Great Depression, how long would it last? Would it be last longer than the last one? Because the last one lasted 10 years?
Well, the other than the stock market took 20 to come back, but that's the thing. You can't have a Great Depression unless you stop the government spending. And I don't think they're ever going to stop that. I don't think they can. I mean, they try to cut Social Security back, and people jumping on cars in Congress in the late 80s when they try to cut anything back. They were losing their mind over Big Bird getting cut. I don't
Yeah,
think there's any stomach for any austerity. So without austerity, without cutting, there will be it'll be hyperinflation, it'll be stagflation. It won't be a depression unless somehow they're going to austerity like Argentina does. And like you said, I think that's virtually impossible. So we're
right.
looking at hyperinflation, stagflation, and all assets going higher. So really, you want to be from a long-term investing, based on your own situation. Holding U.S. dollars, you lose buying. You've lost 25% of buying power since 2020, and probably more like 50% of buying power in real estate. So what you hold your savings in, and what your companies have means of production where they are hedged against inflation is where the action is going to be in the foreseeable future for investors. For traders, you just trade the trends, trade the price action, create a trading system with an edge, and execute it.
For for uh for average Joes, for average Joes, everyday people that don't trade, don't really invest, what would you tell them to put their money at? Like, what would you still tell them the stock market?
What I tell my family and friends, people that ask me, even my children, my friends, the two best quantitative systems, and what's what Warren Buffett also recommends. Warren Buffett says, just buy the S&P 500, buy and hold, you'll make money out of most 10-year periods. If you're going to hold for 10 years, the S&P 500 is the best system. If you're young and you're starting out, that was easy starting out when I was compounding and doing something and holding for long periods of time. But if you got a long period, if you're older, I tell my family and friends, it's not financial advice, just what I tell people that ask me is a target date fund where they automatically start pushing you more into bonds and less into stocks as you get older automatically. If you're just going to set it and forget it for 20, 30, 40 years, that's one of the best structures I have seen for just an investor. The best thing you can do, and I would say, is get 100%. If you have an employer that gives you a 401k match, do the full match, whatever that is, at the very minimum. The first thing you should do, because you're getting 100% return off the top. If you put in 5% of your income and they give you 5%, which is rare now, then do that. You'll get 100% return off the top, and then you put that in a target fund or an S&P 500 index. as you usually, always look, always only advice from your own advisor, but that is a great strategy with an edge that most people can handle the ride.
Man, I appreciate you coming on the show, man. For the viewers out there that's been listening, been watching us, this is Steve Burns, newtraderu.com. Appreciate all the words you said, man. I think you got a interesting story. What you have to say is interesting. I think you see the world uh, very differently. I think you have an accurate depiction of what's going on in this economy and how people should really like pay attention to their money.
I agree completely. I appreciate it. It's been great talking to you today.
All right, man. Appreciate it. Peace.